Welcome everybody. Remember guys, everybody, you don't have to be the smartest person in the room. You have to be the best listener. And here we are going to talk about the market. What happened last week, what is going to happen next week, what I think is going to happen next week. Hopefully I can get another stream, man, and upload it to YouTube. I had to work on my YouTube channel. I got it uploaded, so you can subscribe to that. Sky's affiliation. Just hit the subscribe button, ring the bell. I'll appreciate it. And you guys can leave your comments there. That's the whole point. If you guys missed the Twitch stream, go ahead and just comment on the YouTube channel. We can have a conversation. That was the best way to communicate and get you guys up to speed. So let's go ahead and talk about the market. What happened last week? Remember what I said was that the market, that there's going to be a gold was going to go up and the dollar was going to come down. Gold was trending up, not by a lot, but it was trending up. It was trending up in the right direction. It kept hitting the 1510 mark, 1511 mark around there. The biggest resistance line for gold is 1530. We never even got near it. Just didn't get near it. And it all happened with the China trade deal. It takes up the whatever happens in the market, whatever I'm gonna show you right now, it just gets overshadowed by the hopes of there being a deal, a phase one deal. Not even a deal all the way, but a phase one deal. It started off on Tuesday. It started off on Monday a little bit. There was a little bit of hints here and there. Then it started really, ratcheting up all the way until Friday. And then Friday, before the market closed, we got some news. Yeah, basically we weren't gonna roll back the tariffs. That was Trump coming out later before the market closed. That was him. So everything that I'm gonna show you got overshadowed by that. Gold did not rally. It actually sold off. It came down. The dollar was at a critical crossroad. If it would have broken down, it would have broken down to the 96 area. It didn't. That didn't happen. From 96 it could have gone to 95, which is what I was looking for. That didn't occur. So gold sold off. Let me just quickly show you guys the chart. It sold off. It is 1463. Let me just refresh it, make sure it's still there. 1463. 1 year chart. Let's do the 5 day because that's what I said. Line, candlesticks. So I mean, it just got pummeled. 1463, 1461, the low, 1463 right here. But yeah, it just sold off from where we were at Monday, November. Boom, 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 came down. Dollar rallied. Now, the other thing for gold is that the next, you guys should know the resistance lines, but if you don't, I'm gonna go ahead and tell you. Right now we are 1463. It's bounced off there three times already. It's holding up. The other thing we're doing is the level beneath that is 1448. So if this goes down, it's gonna go to 1448. If it goes down a little bit more, it's gonna go down to 14,400. It won't even hold up at 1420 at that point. It'll just go to 1420 because it's gonna flush out all the sellers. All the sellers are gonna leave, which will leave a buying opportunity if it tests those lows. And most people are expecting it to go to 1448 around there and hold that area. A lot of people that I see that are extremely good at charting, that's what they're expecting. People have been expecting, the same people that I've been expecting and I've shown you, like North Star and others, are expecting that. On the thing, draw the lines on your TA. There's charts out there that I'm gonna show you guys, so that if they're already drawn the lines, so it'll make it easier because I'm trying to keep everything within an hour. So the next level on there is 1448. Beneath that, if it goes down, it will be 1440. For the upside, it'll be 1480, 1510, and then 1530 is the big level. That resistance level is one of the highest levels we've had. Really tough to get there and break out above it. We've only done it a couple times, and the last time was 1460 we got, and then before it sold off. So the data that came out last week, that's not the right one. Okay. Data that came out last week that was overshadowed by the trade deal, by phase one. Every time the market rallies is due to that phase one rally. I mean, due to the China trade deal, because the biggest economies in the world. So it matters. So the Michigan, this is Friday, November, Tuesday, come on. Tuesday. Service PMIs came out at 50.6. They were contracting. What levels of leverage do you use for your futures? TD Ameritrade, and I use for the when I trade on Robinhood because they're free. But if you're trading stocks, I use TD Ameritrade. Thinkorswim platform is where I actually chart, where I use my charting. So service PMIs came out negative, 50.6. Didn't matter because non-service PMIs came out better than expected, which was trending up. That was the bounce that they were expecting. They got the bounce that they were expecting to come up higher. So that caused the market to rally. So gold sold off, the dollar came up. On top of the China trade deal, it just kept fueling the fire. So all of this was overdone by that trade deal. And then we come in on Wednesday. Wednesday, the non-farm payrolls came out, productivity came out, a little bit negative. The big thing for me was unit labor cost. It was costing more for for companies to keep it employed. Keep people employed costs more. You know, that's to me is a sign of inflation. Inflation's gonna go up higher. It's gonna drive everything up higher. It's gonna drive cost higher. It's gonna cost people to get paid a little bit more, even though payrolls and stuff like that have stayed at a normal rate. But it was overshadowed again because of the China trade deal. This was when also I was hearing on Bloomberg in the morning at 4. I'm California time, so at 4:30 I'm hearing that the Fed has achieved a soft landing. It's done an amazing job. You know, they were praising Jerome Powell, and the board members because they have achieved a soft landing. I'm like, wow, really a soft landing like Alan Greenspan did in the early 2000s, late 90s? I'm like, okay, it's a little too soon to see because the third rate cut just happened. Nothing's going to occur right now. So logic and sound. I mean, that's what's going on. Cost of goods domestically go up due to wages. Well, wages also go up due to the inflation. So I mean, it's productivity. So right. So what I mean by simply is saying productivity goes up because of the cost of everything else, right? Even if the wages go down, it could cost you a lot more. So copper is also something we use to see if there's going to be a recession, right? So some people have made good money on last week on the copper because if more companies are buying to make more productivity, it's gonna cost everything to go up. So it's a good hint. That's something a lot of people have been using. Copper is actually trending up. It's on a good path. So if you believe the hype of the China trade deal and everything going up, that is gonna be one of the biggest market movers for everybody else, including oil. That's what everybody in the oil market, energy market has been waiting for. Some sort of a deal. But like I said earlier, Trump said that tariffs, he wasn't planning on rolling them back because, in my opinion, he won't have much of a leverage on the next phase because we're going to take this into phases. So it doesn't make sense for my opinion. There's all opinion basis, only me from what I do or how I do it. That's the only way I do it. So it's all opinion based. Doesn't make sense for him to give up all his leverage so soon. So all this started getting overshadowed. Little by little, they were just cutting, but this doesn't matter. Everything came out a little bit negative, not too much. It wasn't that drastic. The last big news was last week was Michigan consumer sentiment. It was slightly low. It wasn't too much. Forex market, they're killing it in the dollar. The dollar is rallied. I mean, trading in pairs. The dollar is just. It's gunning up higher. I don't think it will break that resistance of 99. I don't think it'll go up higher anymore because of all the negative news that's currently going on right now. Go ahead and close this. That way I don't get confused. CPI. Unit. Oh, that's core CPI. That's stuff for next week. Levels. All right, so on Tuesday last week, Fast Money had a guest, Tony. He's one of the people that have actually, in my opinion, here watching them and everybody else. He's gotten it right most of the time on the market bull rally, on the bull rally here. I'm gonna play the clip where he explains why he believes, which is something that I touched on last week, something that the Fed said when I was breaking down the Fed speech, or what he said. He brings up that same point that I made on why the market, he believes the market is gonna rally, and why, at the same time, what he says, down the road, I believe the dollar will come down. So I'm gonna go ahead and play this clip. Just listen to it. He makes a great point. He's been right spot on the market. He's kept rallying. So I'm gonna go ahead and play it.
10 to 15. And that's why I'm so fundamentally convicted.
If you're waiting to buy, what do you buy when you're down 2 to 5%? Are you buying the sectors that got hit the most in that pullback down 2 to 5%?
I'm buying offense. And I've been buying offense. The guys printing the money, I can't yell it loud enough. The guys printing the money gave us the game plan globally.
Here's when he's about to go and say this. What the Fed said, he's about to say what I said last time when I broke down their speech.
I can't say it emphatically enough. Last week, Powell said an amazing thing that people I don't believe, pay enough attention to. He said the only thing that would make him raise rates is meaningful increase in inflation above. Everybody knows that part. But he also said early next year he's coming out, the Fed is coming out with a way to get inflation expectation higher. Are you going to do, that's not tightening. That's adding liquidity somehow, or making asset prices go up, or some way of creating more spending. You couple that with the comment, Mal, that he said that earlier this year they thought low inflation was transitory, and it wasn't. He just announced the generational change in Fed thinking on inflation that we talked about in July, where they're more worried about deflation than inflation. It's a generational change. So what does that mean? Fed put 101, higher valuations, and even now, given the turn in the global data that Timmy outlined, and the manufacturing PMIs, not that they're good, they're less bad. Let's say you actually turn the global data and stabilize and make it a little bit better. The consumer in the U.S. is benefiting from the lower rates and easier Fed. You could have what we've talked about the whole year, a mid-90s kind of environment, a post-95 environment, where you get big drops, but 20% kind of years. Didn't he?
All right, that to me is a big thing. Sorry, dude. Oh, the audio went out? Damn it. Yeah, I can share the video. Oh, sorry, hold on. Is that, I'm gonna upload it to YouTube, so when I do that, I might get hit with it. But here, let me play it all over again. So I have it in my notes here at 1310. So give me a second. Didn't expect the audio to go out. I have it at 310. 310. So he talks about basically about what the Fed is gonna do. Basically, he brings out the point that I said that that they're gonna print out way more money. They're gonna do something next year. He hinted that they're gonna do something next year. Because right now we're rolling an non-QE, remember. We're doing a non-QE program. So basically, in my experience, my expression last week, I said that they were gonna do something. They're gonna roll something out down the road. So?
On 2 to 5%, because it could be 10 to 15.
That's the point he brings out.
That's why I'm so fundamentally convicted.
If you're waiting to buy, what do you buy when you're down 2 to 5%? Are you buying the sectors that got hit the most in that pullback down 2 to 5%?
I'm buying offense, and I've been buying offense.
And it's worked. Buying offense has worked.
I can't yell it loud enough. The guys printing the money gave us the game plan globally. I can't say it emphatically enough. Last week, Powell said an amazing thing that people I don't believe, pay enough attention to. He said the only thing that would make him raise rates is meaningful increase in inflation above. Everybody knows that part. But he also said
symmetry. That's the word that Powell uses, symmetry. He doesn't want just the CPI. He wants all the other measuring sticks to read 2%. So even if CPI comes out, it comes out next week on Tuesday. Even if that measure is above once again, above 2%, it won't matter.
Next year, he's coming out, the Fed is coming out with a way to get inflation expectation higher. Are you going to do, that's not tightening. That's adding liquidity somehow, or making asset prices go up, or some way of creating more spending. You couple that with a comment, Mal, that he said that earlier this year they thought low inflation was transitory, and it wasn't. He just announced a generational change in Fed thinking on inflation that we talked about in July, where they're more worried about deflation than inflation. It's a generational change. So what does that mean?
Buy everything. It's worked. That's the thing. That's why he's been spot on. He's also pointed out that the only thing that will worry the markets is credit. Data dependent, exactly. That's the word that they've been using, so they're gonna hold back and wait. But he hinted in his speech that they're gonna look to a way to announce something, that they have something in the works. I thought it was not QE, but apparently it wasn't the not QE. They're gonna deal something. The only thing that I firmly believe is they can't call it QE because of Trump. It will not look good to say that they're starting QE when you have a president bashing left and right every day, basically every day, that he wants QE. I don't think it is a good look for them. And something that he brings up, and something that I want to bring out is, yeah, the ACP 500 is higher, the Dow Jones is higher, but the thing is, it's usually only the best in class. The big market caps companies, like the ones you're seeing, Apple, Microsoft, Google Alphabet, Amazon, Facebook, Alibaba, JP Morgan, all these companies, they're great. They are great. They're phenomenal. If you're gonna buy in this market when the Fed is gonna announce more money, of course it's gonna go up. Why wouldn't it go up? Why wouldn't you want to hold a future in some one of these? If you want to do that, I have nothing against it. It's perfect. It makes sense. But it's not a mod break. This isn't a broad market rally. It's just the big caps, the ones that we all know, the ones that we all use every day. That's why it makes sense to buy these things. But it's not everybody. It's just these companies. The transports are down. And they're not down. Okay, they're rallying up, but to their highs. Their highs was 11,500. Let me see right here. Yeah, here we go. 11,570. Sorry, that was the high point of them. The Russell, which is all American, companies, was 1,740, which was supposed to be the against the trade war. We wanted to just U.S. market caps. The Russell was supposed to be the play. Everywhere I heard it was the play. I didn't get in it, thankfully, but it clearly got tanked. And that's right. Everyone trades big market caps because why would you want to trade a Macy's, right? Macy's is in the Russell 2000. A lot of people, even I'm expecting it to be a JCPenney. So if you would have bought a put on JCPenney before it went down to what it currently is, like a dollar stock, almost penny stock, basically, great. Macy's, people were buying puts. I remember 2 years ago, people were buying puts thinking that Macy's was going to go down. Macy's kept rallying. It's kept rallying, which is great for Macy's. But the thing is, when you have a short squeeze of interest, of a short squeeze of 15 to 26%, and they report better, those shorts are going to get squeezed and it's going to pop higher. It's great for everybody that has those calls. Those calls are cheap, but if you bought the puts, they're expensive, then you get knocked down. But this isn't like you're hitting highs, but you're not hitting the massive highs. The other thing I want to point out that came to my attention was Powell is going to speak to Congress next week. So we're going to get a little bit of a hint about his Fed speak. It came out Wednesday, I believe. The news came out Wednesday that he's going to talk to Congress. So I'm looking for some sort of hint. The last time he spoke to Congress was before the second cut. And there was a hint there that he was going to cut. That, he didn't say he wasn't going to cut. Most of the hints were that he was going to cut. Gold rally, that's when we made a good chunk of money. Was when he speaks off script, no paper. It's beautiful. No, I'm not saying. What I was hearing was about the Russell 200 to Russell was that was the play against the China trade deal. If you believe the U.S. was going to win the China trade deal, which that's a big if because the two largest economies, people were bidding that. Who was saying that? Kevin O'Leary. Who's Kevin O'Leary? Shark Tank. If you don't know what Shark Tank is, that's one show that I watch with my son. He said that the play was the Russell. He advised people to put money in the Russell. He advised people to look into the 401ks to put money in the Russell, which got me thinking the Russell's a good play, which at the time kind of made sense. But the thing is, most people know that a trade war isn't easy to win. It isn't easy, and I didn't expect it to be easy. That's why I would not. What I did, I simply put my money in the emerging markets. A bet against the dollar. This is what I'm doing. I'm betting against the U.S. dollar. I think things are trending in the way where people are fed up of our president bashing them with sanctions and bashing whoever he wants with whatever he wants to do. He sanctions them, and then he expects them to follow, which you have to, because the dollar is the world reserve currency. So I think people are getting fed up of it. So to me, precious metals are the play. I keep an eye on copper just because I wanted to go lower, but right now, last week, it trended up. So I have to acknowledge it. I agree with you, man. He's killing. I tell this to everybody that I give advice to. Precious metals, energy companies, they're gonna go up in value. Problem is, when you get a tweet from him, and this is what kills me, the market has been rallying always on his tweets that China wants a deal, China wants a deal, China wants a deal. And I've said this before. To me, it sounds like he negotiates with himself. When China, 3 months, let's take it back 3 months ago. China wasn't picking up the phone. What did he say? I called China, China wants to make a deal. So, wasn't true, didn't matter. He's the biggest market manipulator in the world. That's why I used to play in the Forex market 3 years ago. But when he became president, I thought it was nuts. I think if you play in the Forex market, you have some serious cojones right now with everything that's going on. You have some serious cojones. And I mean, that's just me appreciating people that know how to trade in pairs, Japanese yen, the Swiss, the euro, the pound with all the Brexit news. That's why I'm putting my money and what's safer. For my Forex exposure, I hardly have any. Right now, I'm literally it's just precious metals. The Forex market, I try not to play with it right now because I don't see how the fiat currency system could continue playing along with the rise of cryptocurrencies. That's the thing. So that's what made me, and I'll say I have no problem saying I chickened out on the Forex market because I know crypto is a fiat currency, but I know the dangers of a crazy madman at the White House that says that he wants to devalue the dollar, wants to do all these crazy things that he doesn't understand, wants QE. He doesn't understand what the effects of QE is going to do to us. So I want to protect my investments. I'll protect the people this is the whole point of this stream that I started doing, was to educate the friends that I have that are investing with me in the strategy that I have. Not for them to lose money, but to understand that this is a long-term play. I am missing out, and I agree with you 100% that in the volatility, I love volatility. That's why gold, I made good money on gold in the last year, because it seems to me your stuff as well. But the thing is that gold to me is a long-term play. The dollar to me, at some point, is gonna give out. I thought the dollar was gonna give out last week, but with all the news that came out, I would have lost my pants off buying the dollar. I never expected that. I will be longer the pound, the Britain pound. That's what I will be long. I will be trading for the pound long term. So here's something else I want to bring up to your guys' attention is that China started trading bonds. Bonds backed by euro. So this is the trend that I'm talking about. The dollar eventually, they're chipping at it. Slowly but surely, people are chipping at it. Nice and slow. The only thing that's keeping us there is the OPEC dollar. OPEC. It really is the only thing that, my belief, is the only thing that's keeping the U.S. in play is that. Or else we wouldn't have the things that we would have in the U.S. We would be just like everybody else. Like Italy. I think we would be like Italy. We wouldn't be Japan. There's no way we'll be Japan. Japan has a surplus. We'll be like Italy. We'll be like Greece. We could be like Greece. if it wasn't for because everybody funds the U.S. and has to buy the U.S. dollar. So China started chipping away. China has been buying gold. Russia's been buying gold. Germany just started buying gold. Turkey started buying gold. Other nations are buying gold. CFA, but I know a little something. At this point, I would hope so. Man, that's the thing. When everybody starts chipping at buying gold, it brings me, someone that has very little. Why wouldn't I want to buy gold if these countries are buying gold? And the U.S. is just spending like nuts. Remember, we have no debt ceiling for the next 2 years. We just passed that law, bipartisanship. The only time Congress could agree is to just screw us. So they agreed. No debt ceiling. We have somebody that's willing to spend. Why not? Why not just keep supplying the dollar money? So supply and money numbers come out every Thursday. That's something that I want to touch on too. I can't forget to tell you guys that. The money supply numbers come out on Thursday. They come out back in the 70s and early 80s. People cared about that. How much money is the U.S. printing? What are we doing? What are we doing with our money? Right now, no one cares. All we care is about the consumer. Why? Because the consumer is 73% of the economy. As long as they're employed, as long as they're getting paid, as long as no one's getting laid off, that's all we care about. All the numbers that I'm showing you that people care about, the ones with the three horses, three bulls, is that the consumer. Is the consumer good? It has nothing to do with the U.S. economy as much anymore. It's just, can we continue borrowing money and paying that money, managing it? I don't think we could continue managing it down the road. And that's the thing. He 100% right. It's designed that way, which could only mean that it's gonna crash. In my opinion, it's only gonna crash. That's the end game of any fiat currency. The thing is, I used to believe in a gold-backed standard, right? Because we always, every time the market crashes, we go back to a gold standard. That's the name of it, gold standard. The thing is, do we really want a gold standard? Wouldn't, in my opinion, from what I keep reading about and learning about, wouldn't a silver standard be better? Shouldn't we make money more plentiful, debt-free for everybody? So I debate back and forth on this, but I mean, I'm just a 28-year-old trying to protect myself and increase my portfolio and in these things. You know, my 401k, Charles Schwab took out precious metals, or else I would be in precious metals and emerging markets. The only thing I do and can do is I put it in medical. Because if we get a socialist president, I don't think they're going to be able to pass anything that will harm the medical system. And, you know, they lobby the craziest amount. And exactly, 100%. At times of uncertainty, gold rallies. The thing is, since I buy options, I buy a little bit of gold stocks, but I don't buy as much as people will want, because I'm swinging for the volatility. With the volatility that's been showing in the gold market, I am buying options. I am buying options on the best in class in gold miners, because those are the ones that are going to give us the biggest return. Those are the ones that I'm looking for. The ones that could give me that big return, and then I'll execute those calls to execute the contracts to buy the stocks. The other thing was one of Russia's oil giants. He asked traders to pay in euros for crude. So, again, we're slowly starting to see countries and companies. Iran trades their oil and the euro to protect themselves from the U.S. sanctions. China still buys it. Doesn't matter. China doesn't care. The Europeans don't care. Only the U.S. cares. Because we get propaganda. In my experience, that's what we get. I don't think they care about building nuclear reactors to bomb the U.S. I mean, anything probably to defend themselves from the U.S. But they should have nuclear energy to provide for their people. They're growing. In my experience, from what I've read, they're growing. So why wouldn't they want to have nuclear energy to power their people, give them electricity? It doesn't make any sense to me if they're used to just keep bombarding them. The stranglehold in currency economies. Yep, the gold standard. That's why I'm a little iffy on the gold standard going forward, but gold has always been the safe bet. How do you feel about cryptocurrencies? What do you see in the Bitcoin? That's the other thing. That's the gold chart. That's the levels that is at for a year. Here's where people are waiting for it to break down. Oh no, sorry, it's this one, 1448, right there. That's the level. We're getting real close to it. This is the balance sheet. Once again, it grew. We're back up about 4 trillion. We're back up about 4 trillion, equal to 18.8% of the U.S. GDP. Nuts. I think we're at 145 GDP spending, GDP, government spending, GDP. We are the government spending is the GDP. That's insane. Back then nobody cared, but nowadays, in a market like this, maybe you're holding GG calls. Yes, I am. That I am. I am holding those, and I keep rolling them. I keep rolling my GG calls. The other thing is this: we're at 145%, 155% GDP. Japan has like a 225. People use Japan to compare us to them. They have a surplus. We have a deficit. We don't match with Japan's system. We're not Japan. We're not going to end up like Japan. I think when the U.S. dollar collapses, people like Japan that have surpluses, Germany that always is, financially stable, these countries that have always been financially stable, they're going to show. Who knows if the euro will be there when the German kids go back to the mark. And I will buy the Dutch mark. I think that will be one of the best options. Changes to the tech, but because of decent scale, extremely well. Technology helps broke keepers. Yes, sir. The other thing that when the markets like these are like exploding, fraud occurs. It happens in the early 2000s. You could always go back and see examples of this, of fraud popping up. One of the news that broke out last week that I kind of want to bring up and touch on was Under Armour. They're being investigated by the SEC on their trading practices. Basically, what is going on, simple terms, is they're using the non-GAAP metrics. There's a GAAP metrics that everybody agrees to that globally. This is the way we're gonna account for our earnings. This is the way we're gonna show you guys our earnings. No tricks, no none of that. It's just this is the way we're gonna do it. They're being questioned on that metric, and what is it that they do? Non-GAAP metrics make everything seem better, but they have to add little footnotes on there. Basically, it becomes pretty simplistically, it's like the duck. If you look closely, it's a duck, and then if you look a little bit different, it becomes a rabbit. It's what you see, a rabbit, or the old lady, the young lady, the old lady, or the old lady. The young lady could to some people look like an old lady. That's the net metrics of GAAP and non-GAAP metrics. And here's the other thing that came out recently. Study percentage of companies using non-GAAP metrics rose from 59 to 96% in 20 years. That's insane. You're not supposed to be using non-GAAP metrics. They're not supposed to be doing this, but they do it because earnings have been coming lower. Year-to-date earnings are lower. So they have changed the metric. The way they do things, they have changed it because it benefits the companies at S&P 500. A lot of them have a bunch of they're not junk bonds. Excuse me, they're not junk bonds, but they're slightly one grade above junk bonds. So they're changing the environment. Exactly like Enron. This is the Enron thing that's going on right now, but no one cares. Why? Because they're beating expectations. They're beating expectations. Let me go ahead and take a quick break. I gotta do something. I'll be right back. I just gotta do something real quick. Sorry. Hold on. Sorry. That's one of the reasons I want to bring it up. Enron was a massive scheme. If you've never seen any documentary on Enron, you should see it. Netflix has a beautiful documentary on it. Can't believe I used that word because the president uses it. Damn it. It's a great documentary. See it, understand how they projected their earnings, how they weren't making money, but they were projected, and those earnings will come out. Oh man, I appreciate that. Thank you for following me, dude. It means a lot. Thank you. That's something that's why I want to bring it up to you guys' attention. Fraud occurs. This isn't the only company being accused of using non-GAAP metrics to fund and execute, their earnings. Under Armour was the big it until it wasn't. No one cares about deficits and debts until they do. And when they care, everybody runs to it. So I try my best to get ahead of it, which is why I own some stocks and precious metals. I believe in order for the U.S. to save itself, down the road, I firmly do believe this. We're going to have to bombard somebody. Meaning war. Meaning oil will go up in price. I say that candidly, but I understand that it's a real thing. The U.S., when it comes to protecting itself in war, we will look for a way to do it. Because this is not going to end well. Especially when we have someone like the current president that we have. I don't believe it's going to end well. More and more companies are just using the metrics. There was another company, I just forgot to bring it up. Can't remember exactly what it was, but I don't have it on my notes to talk to you guys about it, to bring it up. The other thing that I quickly want to touch on is the bond yields rose. Remember, I've been saying that interest rates are going to go up. They're going to go up because of all the money we're printing. It doesn't make sense for people not to own some bonds when they're going to go up. These are something that experts from real traders, the brokers, they brought up. Fast Money, Jim Cramer, anywhere you business, Fox Business, Closing Bell, they've all talked about how the bond market started to pop up, and it was a big move. It was one of the biggest moves that has had in 5 years, I believe, 5 or 6 years, 2015, I believe. So 4 years, that it was a massive move, and that it was too big. And they're like, if it continues rallying, would this become a problem? Meaning for long-term interest rates? And the answer is yes, it will become a problem for long-term interest rates. It has to become a problem. Because if interest rates go up higher, it's going to cause the U.S. to have to raise interest rates to fight that inflation. But the thing is, Powell just said that he's not going to do it unless all the measuring sticks that we have, CPI, CPE, and all these other measuring sticks, go above 2%. So this is a concern. If it keeps going up higher and higher, eventually the market will have to sell off because of rotation that's occurring. At the end of the year, every December, I believe it's November, December, there's a market where the hedge funds rotate their portfolios to get ready for the next year. So it's something I'm keeping an eye on is the bond market as well, going into this week, because I believe there's going to be a bigger move. Another thing that I want to quickly touch on is when I was listening to Bloomberg, they have a bunch of the Fed board members. One of them brought up that they wish they had more control on the 10-year yield. The free market controls the 10-year yield, but he brings up that he wished he had more control over the 10-year yield. For what? You want to bring it down lower? What do you want to do? I'm a little worried about their announcement beginning of the year to see if they're going to do something to the 10-year yield, because that was a weird hint to say. Because when the free market does the 10-year yield, so that's something that just caught my attention because it's not normal to say something like that. The other thing that quickly want to touch on, it's not that. It is the juggernaut of the IPO. The what is it? The Saudi Arabia IPO on their market, on their gold, on their oil market. Oh man, I forgot to bring it up. Let me look it up real quick. This is expected to be the biggest IPO in the world. Trillions. This thing is supposed to be valued at trillions of dollars. Trillions. It is nuts. And one of the things that's coming up right now, as of today, is that we don't know what companies are going to own what percentage of the market. You know, what shares or how much Saudi Arabia itself is going to own of the market. We don't know what percentage is going to sell the price. What is going to at what rate they're going to hold the shares at, and what rate they're going to sell it at. So it's one of the biggest IPOs. It's going to be the biggest IPO. China, I think, it put like 10 billion into this. So everybody's joining this IPO. So to me, it's a hint that oil is going to go up higher. Or they want the oil. They've been saying that they want the oil market to go up higher. So to me, the energy market is going to go up higher regardless of a China trade deal. They're going to make it happen some way or another. The US just keeps pumping up the oil, so people keep selling it off. It keeps selling off at that point. So the calendar week for the upcoming week, the big day is going to be Wednesday. It will be Wednesday. Wednesday the 13th. We're gonna get the Britons gets it. We get it too. The core CPI month over month, year over year. Year over year, we are still rolling in the dough of 2% and higher. We are still going up higher. My experience the last couple of months, when the CPI comes in hot, when it came in hot, gold sold off because people expected the Fed to maybe increase rates. Maybe. So gold sold off, and then it rallied again shortly after. I think this number is going to pop up to 2.5, a tenth of a percent. They've been saying they're waiting for the highest value. Yep. I don't think they will go off this market after the WeWork fiasco. That's the other thing. Thank you for bringing it up. WeWork is one of the reasons why a bunch of companies, IPOs, have been tanking. I've been against Uber. I've been against Lyft. I've been against Pinterest. I've been against Zoom. I've been against a bunch of these new companies. Chewy. I've been against them because they don't generate a profit. That's something I brought up before. These companies say this thing is worth $10. Just simple, $10. We're selling at $8. So of course people will go to them and buy it. Why wouldn't you buy it from them if they're giving you $10 for $8? You were making $2 off of that, and it's getting delivered to your house. Why wouldn't you take it all day, night? But the minute they try and make a profit, they gotta increase rates. They gotta increase prices. So why would you then pay $11 when you were getting at $8 when you could just find somewhere that sells it for $10? Doesn't make any sense. That's why I don't believe in any of these companies. I like value companies that are generating profit, which is once again why the big market cap companies, Apple, Microsoft, Facebook, Google, even Amazon, if they were to cut their top line, they could generate profit. That's why the people consider them value plays. Even I like consumer staples. Even utilities at the rate that they're at, like they're really high PE. But even those I like because they generate some sort of safety and comfort. So those are the ones that I'm kind of looking at. But WeWork was a massive, massive fiasco. It was so bad, even JP Morgan's CEO came out and said they never supported it. Their name was on the damn thing. It wasn't one of those and then it was Circle, and they had JP Morgan Chase. They were one of the backers of it. Like, we never believed it was worth $46 billion. SoftBank, if you could short SoftBank, if you had the kind of capital to short SoftBank, by all means, they're the ones that are funding most of these venture capitalist things. Those are the ones that are doing this. The theory is a cheap users addiction and increase in yep, that is 100% right. The theory is you start in cheap and get the users addicted, then increase prices. 100% right. But the thing is, when the bottom people are being hit with inflation, as if it's not cheap, why would you continue doing that when you're gonna look for somewhere else? That's the thing. Most of the wealth isn't getting to the bottom half. So they're the ones that benefit when these companies were thriving, making it cheaper. But they're the ones that are gonna suffer because then later on they gotta pay higher premiums to get what they were used to getting. Yep, and they were the underwriters. WeWork is a massive. Thank you for bringing that up. That was one of the other ones I wanted to bring up. Thank you for bringing it up. I appreciate that. These are the labor costs that, once again, they're in my opinion, they're going to continue trending up. So you know, this is something that I'm looking at for what I'm gonna do. I'm looking to get into a position where I'm slowly buying gold. The FOMC meeting is not gonna occur until December. So right now I am buying gold stocks. I am buying things that took a beating. Newmont reported and it took a beating. I'm not buying a lot, but I am buying a little. American Eagle Mining did phenomenal. I'm buying that. AUY, Yamaha Gold, I'm buying that. It beat earnings. KGC took a 5% hit, negative. I'm slowly buying that again. I'm buying silver miners. Pan American Silver, phenomenal earnings. If you look into their earnings report that they brought up, they did phenomenal, and they pay a dividend. Gold, Barrick Gold, increase their dividend, and and increase their projections. This is a trend that you want to see. They have low PE earnings, so you should nibble a little. You don't have to do too much. You can nibble a little. If I'm buying option calls, if they sell off on Wednesday from the data that's going to come out on Wednesday, sells off, and we touch that 1448 level, I'm gonna buy a little, and just a little in December. Expecting, and I'll keep saying it. I expect the data to keep coming negative. The China trade deal has been propped up so much that, in my opinion, it can only go down lower. In December, we get the Brexit news. So I am expecting those things to fall apart. So I am buying option calls on gold late December, but early before Christmas. That week, the gold will pop off of a cut, off of a broken China trade deal, off of Brexit, off of the negative data. So I want to keep doing it. I want to GDX. It brings up gold mining, the GDX. I love GDX. I love the GDXJ, the miners. Jenga, Nugget. I'm long those, but those options are really pricey. So I recommend buying the best in class in gold miners, the best in class in silver miners. If you want to buy the silver and you want to buy an ETF, SIL is a great silver mine ETF. I've had great experiences buying those. With the volatility that's currently on the market, those to me are great plays. And then you don't have to risk too much with the forex market, with the dollar, because the dollar, with the ups and downs, you have to correlate all these things that are going up. The levels, you have to know the levels of the gold market to see if it's gonna bounce off. So remember, if gold comes out to 1448, I'm a buyer. If it goes down below 1448, I'm in no rush to buy. You shouldn't be in a rush to buy either. You should just wait it out. Be patient. Read the numbers, read the market, see if it's gonna go down to 1400. A lot of people believe if it goes down to 1400, it's gonna make it longer. It's gonna make a good gold market rally. It's gonna make it longer. And on its way up, you buy, you sell. You remember the levels. You see if there's gonna be a 5% rally in silver, and if it is, get ready to sell because there's gonna be pullback. 5% rally in silver is a big move. I've only seen it happen twice. In Jenga, Nugget, a 10% move on their part is a big move, up or down. So I'll sell. And if Jenga hits 10%, I'm a seller on my contracts. I'm a seller on my stocks. It doesn't matter if it's KGC, Barrick Gold, or whatever. I'll sell because Jenga has shown me that once it hits that level, it'll sell. The rest will sell off too. And there'll be a little correction, and then I'll buy the dip. That's the play that I've been doing. That's the play that's been working out for me. I love talking markets. I love that you guys could comment on the YouTube channel, subscribe to the YouTube channel, and just give me more things that you want me to look at. Practice, charting on the Thinkorswim TD Ameritrade platform. Tell you about the levels. And follow me on Twitter if you want. I always retweet the stuff of the people that I follow, the people that I take advice from, what they bring up the market. They bring up fundamentals and stuff like this. I like markets. I like talking markets. I annoy people. I'm at work. I work at a warehouse. I manage their 401ks. They're in emerging markets. They're the same thing that I am. I don't give them anything that I'm not in because I want them to succeed as well. Some of them are, we trade options. I trade options on Robinhood Gold. Robinhood. But when it comes to stocks, I buy them on E-Trade because I have an account because the company has option stocks. Sorry, option stocks on there. And the one that I use is a TD Ameritrade. That's the one I use the most because of the Thinkorswim platform. Since Charles Schwab announced all their things that are gonna be free trading, those are the ones that I use. The last thing I want to touch on is the reason why I'm telling you guys not to trade stocks on Robinhood Gold. This thing popped up and I couldn't believe it. No man ever loses profit. Yep. Just take profit. I tell that to everybody. Leave money in your account. Say it goes up. Say you have two calls. You hit those 2 calls. Those calls are now worth $100 each. Sell one. Take profit. You make $100. You put $50 in your trading account. Put $50 in your banking account. There is nothing wrong with putting money in your bank account. Money in your bank account is the best thing. It's the best feeling in the world to wake up and know you have money in your bank account. Leave money in your trading account when it dips and you know the levels. You buy it again. You buy those dips. But do that. But if you're gonna buy stocks, do that please on big companies. Fidelity, TD Ameritrade, E-Trade. Robinhood, this is the reason why I'm so cautious when I'm trading options and I don't keep a big stack of cash anymore in Robinhood because of this. People were finding out how to use the gold, Robinhood Gold, to leverage the portfolios. What they would do is they would buy AMD, $4,000 worth, $2,000 they will put into their account, and $2,000 that Robinhood would give them. They have $4,000. They will buy AMD, then sell calls, premium calls at a $2, which is $2,000. And Robinhood will give them credit for those $2,000, and they will make it into $4,000, and they will put 4, and they kept doing that over and over until they leveraged themselves to 1.7, 1 million, and then somebody leveraged himself to 500,000, and he lost all his money and buying put calls on Apple. When all signs were pointing that Apple was gonna go up, this guy bought put calls. Even I was like, this is someone that doesn't understand the market, doesn't hear what analysts are saying, doesn't understand what the Fed is saying, and he bought put calls. Lost $50,000 worth. Robinhood is never gonna get his money back. You're not gonna go up to that guy and get his money back. You could put him in jail, but it's not gonna happen. A lot of people did this. Some of them leveraged on 50 times. Some of them leveraged 500 times. They're not gonna get that money. That is something that I just want to bring up to your attention. Do not keep big jugs of money in Robinhood. Please be careful when you're trading on Robinhood. I use Robinhood because it's free on options, but I trade stocks, buy stocks that I'm long on TD Ameritrade, on E-Trade. I don't have a Fidelity account, but Fidelity is ranked 1 because they have the most millionaires. It's safer. They have way more capital. They're not gonna. Something like this is not gonna happen to them. It's just they're better run. They have better management. When you're gonna invest in a company or something like this, you need to understand management. Management is the first thing you should look at, and then balance sheet. You need to have trust with them, because if they do something dumb, boom, it's over. McDonald's CEO had a relationship with the co-worker. Consensual, doesn't matter. Guess what? He's off. The board fired him. Stock took a 3% dip, which isn't much, but because of what he did to set all that up, it's extremely important. So I just want to bring that up as a last thing. Please be careful when you're trading on Robinhood. Last and foremost, remember guys, you don't have to be the smartest person in the room. You just have to be the best listener. And there's a lot of signs out there that fiat currency is in danger. If to those that are trading Forex, you have the biggest cojones, and my massive respects to you. Thank you for hanging out. I'm going to go ahead and end the stream. I got to get everything ready for tomorrow. Thank you for the follow, Jin. Means a lot. Hanging out. I appreciate everything. Have a good night. Bye.